welcome each and every one of you to the October 2024 edition of the Black Star Market Scholar. We are excited to have all of you here as we explore the latest trends and developments in Ghana's capital markets and other issues. My name is Ernest Edu Owusu. I'll be moderating today's session. For those joining us for the very first time, the Black Star Market Scholar is a thought leadership program by the Black Star Group to serve as the research, insights, and analytics department of the whole market, while we provide an enabling platform for industry players like yourselves to discuss matters and issues arising within the market space. This morning, we have our presenter in the name of Ernestina Mensah Otabil, Senior Portfolio Analyst with the team, who will be speaking to the agenda for today. You can expect a detailed analysis covering a comprehensive macroeconomic update on the back of some trending events globally and locally to focus on inflation trends, currency performance, and geopolitical risks affecting global markets. We would also delve into the capital markets, highlighting government securities, interest rates, and trading volumes, as well as year-to-date performances of some stocks on the markets. If you're a regular participant of this call, you would have observed that our presentations are in two parts. The first session where we do the macros and the capital market updates, and then the second part where we pick a random market-related subject and share insights on. This morning, our dice fell on corporate bonds. As the test for diversification of financial instruments still persists, we saw it appropriate to do a deep dive into corporate bonds, including recent trends in corporate bond issuances, performance of corporate bonds post-DDEP, and then investor confidence in corporate bonds. So these are the various matters we will be discussing. Our presenter will be running us through today. Now, throughout the session, please feel free to jot down any questions you have by utilizing the chat box or the Q&A box. We will have a dedicated Q&A session at the end where our team of analysts will help put this whole presentation together, led by the presenter herself, Ernestina, address all your queries. Additionally, after the presentation, we will conduct a brief anonymous poll to gather your views on what has been discussed so far. And we encourage everyone to participate in this poll as it helps us gauge the appetite or interest of the markets. Once again, welcome to the October edition of the Market Scholar. Our presenter is fired up like a hot balloon, ready to fly. So without wasting much time, I'm going to invite Ernestina Mensah Otabil to take us through today's presentations. Stay good.
Okay, good morning, everyone, and thank you very much, Ernest, for the introduction. So like Ernest rightly said, my name is Ernestina Mensah Otabil, and I will be taking us through the market scholar for October 2024. So we are going to just have a brief overview of the markets and what's happening in the markets, and then we delve into the business of the day, which is corporate bonds. So without any further introduction, we are just going to kick in and then start with the market update. On the first global news headline, we see that the Central Bank of Kenya has lowered its 2024 economic growth forecast to 5.1% from 5.4%, which cited a slowdown in various sectors during the second quarter as the reason for the revision. However, the Central Bank of Kenya actually remains optimistic about the country's overall performance, noting the continued strength of key sectors, including agriculture, exports, and then also service sectors. Now to the second global news headline, US inflation has actually decreased to 2.4% as of September 2024, which also marks the sixth consecutive monthly decline. So while this is the lowest rate since Feb 2021, core inflation, which excludes volatile items like food and energy, also increased slightly to 3.3%. Now, the Federal Reserve, which recently cut interest rates, may be encouraged by these figures, but the concern still remains regarding service inflation. Now, to the third global news headline, Hezbollah has seen significant escalation with Israeli strikes targeting areas in Beirut and southern Lebanon, particularly in Hezbollah positions. So while Hezbollah has also fired rockets into the northern Israel, including the city of Haifa. So these exchanges are often part of broader tensions between Israel and Hezbollah, which is also a Lebanese militant and political group backed by Iran. Now, still on the Israel and Hezbollah conflict, we see tensions in the Middle East, still involving Israel and then Hezbollah and other regional conflicts, which is also driving increased volatility in global energy markets. So the key factors actually include concerns about potential supply disruptions and then also rising oil prices due to political risk, and we see its evidence in the oil prices as it is circled over here. We see its evidence in the oil prices as there has also been production cuts and supply of oil has also been low. So then investors also seek a safe haven, which is gold, as investors tend to go during times of uncertainty, which also causes the prices for gold to also push up, as it is seen here. And we also see that the more severe the perceived geopolitical risk, the higher gold prices tend to rise. Now, on the local front, we see that Ghana issued new bonds to investors in exchange for existing ones, concluding a lengthy restructuring process, which is aimed at making its loans more sustainable under the IMF program. So investors received new instruments worth about $9.4 billion in return for their old bonds as part of a deal that presents bondholders alternative choices, which is the DISCO and the PAR option. So those who actually opted for DISCO agreed a 37% reduction in value and received two new Eurobonds maturing in 2029 and 2035 that pays 5% from this year to July 2028. And after that, it increases to 6%. Those who accepted the PAR received a 1.5 security due 2037 without a haircut. And then on the second global news item, ESLA has disclosed that around 90% of non-sovereign bondholders have successfully submitted their bonds for tender. So this actually follows the September 16th, 2024 announcement to repurchase all outstanding bonds under ESLA PLC's tranche E2, E3, E4, and E5, which is held by non-sovereign bondholders. So now to the last global news headline, Ghana's inflation hit up in September on higher food prices. So the country's inflation rates unexpectedly increased in September for the first time in 6 months. raising doubts about policymakers' forecasts that price growth will ease further toward the end of the year. So this was actually due to a 3 percentage points jump in food inflation resulting from an increase in food prices in the country. So to add to it, BOG also revised its inflation rate from between 13 to 17% to 18% at the end of 2024. So now the question is whether the Bank of Ghana will be able to meet its projection targets given the recent increase in inflation and the rise in geopolitical tensions. Now, in 2024, Ghana's policy makers have maintained a dovish stance by cutting interest rates by about 300 basis points to stimulate economic growth. So the decision reflects their focus on supporting economic activity amid global and domestic challenges, which is mainly to stimulate domestic consumption and then also manage factors such as global inflation prices and also maintain economic stability. Now, when we look at the adjustments there, when we look at the series of adjustments since, we see that in 2020, there was a significant hike of 1,005 basis points, which actually marked the beginning of cumulative increases. And in 2021, the hike still remained at 1,005, but then in 2022, we see another significant hike of 1,250 basis points, which also and then there was also an upward trend with an additional hike of about 300 basis points. And in 2024, surprisingly, cuts were reduced by 300 basis points, which also marked a substantial shift in the policy stance after several years. So as of October 11, 2024, the Ghanaian cedi continues to depreciate significantly against the major currencies. So the year-to-date depreciation against the US dollar stands at around 25%, which is actually a reflection of the ongoing macroeconomic challenges and then also the external pressures. So against the euro, we see that the cedi had depreciated by approximately 24.24%. And against the British pound, we see that the cedi had depreciated by about 26.78%. Now, on the local equities front, year to date, we see that Unilever is the top gainer. We see that Unilever is the top gainer this year, and GLD followed closely, also due to the rising gold prices, reflecting investors' growing interest in safe haven assets amidst uncertainties in the global economy and then also the local financial markets. Now, the laggards for up until this year, up until October 11th, we see that the laggards, the one that was high was COW with year-to-date of negative 41.67, followed by EGL with a year-to-date of negative 16.74. For the primary auction this year, the government raised about 176.92 billion against a target of about 174.75 billion. So this actually brings us to an oversubscription of 5.17 billion year to date. However, since July, primary auction has been largely undersubscribed, but government continues to meet its maturities. Now, when we see a trend in the interest rate cuts or the cost of borrowing, we saw that the rates actually declined at a faster rate at the beginning of the year as the government was exceeding the targets. But then from from May 2024, when the government started missing targets at some auctions, the rates declined at a slower rate, and this actually raises an alarm about the government's ability to borrow at a lower cost. So the rate on the 91-day bill as of 10th October was 25.62%. The rate on the 182-day was 26.90, and on the 364-day, the rate is 28.58%. So volume traded from Jan 2023 shows fluctuating activities till September 2024. So Jan 2023 started with 10 billion, and then the volume steadily decreased to about 5 billion by May. 5 billion by May, and then there was actually a major recovery which occurred in July 2023, which was around 5.5 billion. And then after that, we see that the volumes actually started rising, and then it actually continued to rise until somewhere in June 2024, where we see that there was actually a lower volume recorded on the secondary market. And we see that the average volume that has been traded is about 10.35 billion. And then the total volumes, as of September 2024, we see that the volume that was traded was 15.52 billion cedis. When we look at the major performing indices, we see that domestic bond gained about 4.7%, which is also still underperformed against the Eurobond index, both in CD and in USD terms. Now to the business of the day. Now to the business of the day, which is corporate bonds, we are going to take a look at the major issuers of corporate bonds, how these companies have fared, and the investor confidence, as Ernest mentioned. And then we look at a comparative performance between these issuers of the corporate bonds. Now we just do a bit of introduction about corporate bonds. Just for formality's sake, corporate bonds are essentially debt securities which are issued by companies to raise capital. And also, when investors purchase a corporate bond, they are actively lending money to the company in exchange for periodic interest payments and the return of the bond's face value upon maturity. So companies essentially issue bonds to raise funds for various purposes, such as expanding operations, funding new projects, or refinancing and external debt. Also, companies frequently issue corporate bonds to finance acquisitions of other businesses and also for expansion. And by also issuing securities that are marketable and liquid, companies can also attract more investors, and this liquidity also provides a sense of security for investors, knowing that they can sell their holdings if needed. Now, finally, companies also issue bonds so that they can diversify their funding sources beyond the traditional bank loans, also reducing reliance on single source of financing. Now on this slide, we are seeing the issuers of corporate bonds. So it actually has the corporate bond issuers, past and present, and then also the quasi-government bond issuers. So we are seeing Bayport, Kasapreko, Quantum, Delex Finance, Esla, Dache, Eastway, Leshero, Cocoboard, and then also Bond Savings and Loans. Now, this chart just represents the evolution of corporate bond market listings over the year, from 2014 to 2024. So when we look at 2014, the journey actually began in 2014 with Eastway Savings and Loans making the first corporate bond listing in the market, and then In 2015, we saw the entrance of multiple players such as Leshego, Edendale Properties Limited, and then Bayport Savings and Loans. And then fast forward to 2017, we see the entrance of Esla PLC and then Bond Savings and Loans. Now in 2018 also, which is actually the surprising part, we see the entrance of a non-financial company like Quantum Terminal also entering the bond market. And then moving on to 2020, we see Dache also entering the bond markets. 2023, Ghana Cocoa Board, and then 2024, we see Casapreco Company PLC also entering the corporate bond market. So looking at this bar before us, we are seeing a clear representation of how corporate bonds have experienced high traction in recent years. So this is actually the issuances on the corporate bond market in Ghana by year. So from 2014 to 2020, we see that the market raised about 10.48 billion. And this period actually laid the foundation for the growth we are witnessing today. So companies, particularly in sectors like finance, were also tapping into long-term capital resources to fund their expansion. And then also it's actually sets the tone for increased confidence in the corporate bond market. However, in 2021, we see a sharp decline. Issuances actually dropped to 2.85 billion, and actually the world had just come out of a pandemic, and Ghana, like many other economies, was also grappling out with the effect. So market participants were also cautious, and companies hesitated to raise funds due to uncertainties. So it actually continued in 2022. Continued in 2022, where issuances dropped to 234 million cedis, and there was actually a significant low point, signaling market hesitation, and then also a more risk-averse attitude from both issuers and investors. But what happened in 2023 was very, very crucial and actually marked a major turning point, and we see that issuances actually skyrocketed to 7.8 billion, mainly 7.8 billion cedis, mainly because of the entry of cocoa bonds in that year, and investors were also seeking other alternatives after the DDP. So in total, since the market's inception, we see that about 21.87 billion has been raised on the corporate bond market. Now, when we look at the amount raised by corporate minus the quasi-government institutions, we see that Leshego Ghana and Bayport are the standout performers. So Leshego actually has raised 476.7 million cedis, while Bayport has also raised 642.8 million cedis, which actually indicates significant market confidence, with both companies raising a substantial portion of the total bond volume. So on the lower end, we see Ghana Home Loans, Quantum, and Dalex Finance also raising a bit modest amount, signaling that while there's interest, the market confidence in these entities is relatively lower. Now, when we look at the number of tranches that has been raised by these companies, we see that Leshego has actually issued 40 tranches, which is the highest on the slide, and then followed by Bayport, which has also issued about which has also issued 21 tranches. Now, when we zoom into the quasi-government bonds, on this slide, we are looking at ESLA PLC, and ESLA was actually set up to address the debts in the Ghana's energy sector. Specifically, it actually helps to restructure debts owned by state-owned enterprises by banks. And then it was also to trade creditors and was also used to manage and reduce the energy sector's long debts, using the Energy Sectors Levies Act as a consistent source of revenue. So in 2019, we see that the total receipts that had come into ESLA PLC was about 1.09 billion cedis, and we see that for the receipts that has come into ESLA PLC, we see that a major chunk of it came from 2021 of about 1.84 million cedis. Now, when we zoom into the profits after tax, we see that 2022 was actually the year that ESLA PLC recorded a high profit after tax of about 109 million cedis. So during the period, ESLA actually demonstrated a robust issuance of about 7.6 billion cedis in bonds, which is in between 2017 and 2020. And it was actually a crucial phase for ESLA as it was establishing its role in managing Ghana's energy sector debts. And then also it utilized bonds proceeds to address energy financial challenges. So in 2021, we see that the issuances dropped to 2.5 billion, and this is because of the adverse economic conditions by the COVID-19 pandemic. Now, on this same slide, we see that after 2022, there were no issuances, and this is because of the DDEP, and ESLA bonds were also restructured with the old bonds. So then when we look at the charts underneath, it's actually showing the outstanding debts before the DDEP. And we see that the company had a total of about 8.3 billion to settle in debt. And we see that the highest debt was in October. So the October is actually in October 2027 of about 2.6 million cedis. So this slide also provides an analysis of the ESLA bonds holding trends since Jan 2023. And we see that firms and institutions are actually the major holders of ESLA bonds, accounting for about 3.6 billion, and also suggests that institutional investors in the ESLA bonds is high, and large-scale investors are deeply involved. Now, pension funds are another significant player, holding about 626 million cedis. 626 million cedis of ESLA bonds, and pension funds also tend to favor stable long-term investments, which also indicates trust in ESLA bonds as a secure option. So it follows through by individual investors, which also made a notable contribution, holding about 289.3 million through their share, and it's actually smaller compared to institutions and pensions. Now, when we move to the second quasi-government bond, which is Dachi Trust. Dachi Trust SPV was also introduced by the Ghanaian government to manage and refinance debts related to the Ghana Education Trust Fund, which is the GET Fund, and is also responsible for educational infrastructural development. So the goal was actually to raise funds to support the completion of ongoing projects and also maintain the development of educational infrastructure across Ghana. Now, when we look at the inflows or the receipts that Dache has actually gotten from Get Fund levies, we see that the highest inflow was in 2022 of about 556 million cedis. And after that, there was a decline in inflows, which was because of tax revenues and also delays in collection of levies meant to fund the Get Fund. Now we take a look at the profits, after tax, and we see that it has actually been on a downward trend. And even though there were not a lot of receipts in 2023, the company had made some considerable profits in 2023 and has still maintained some profitability despite the economic conditions. So moving on to Dache's total issuances, we see a steep decline in bond issuances after 2020, and even more dramatic, for the lack of a better word, by over 90% in 2022. By over 90% in 2022, but then after 2022, we see that there were no issuances for Dache, and which was also attributed to the DDEP and the bonds also being restructured together with the old bonds. Looking at the outstanding principal amount, we see that a major chunk of its maturity is in October 2027 of about 1.8 million cedis. So despite the efforts to offload Dache bonds and reduce individual investors also so despite the efforts to offload Dache bonds and reduce exposure, individual investors actually continue to be the largest bondholders. So since Feb 2023, the offloading process has been a bit slower than anticipated, and individuals maintain a significant stake in Dache bonds holding. Now, when we look at Easeway and then Easeway's profile, Easeway is actually a financial services company with a strong focus on providing tailored financial solutions to individuals and businesses. So Easeway actually offers a range of personal loans, which is designed to meet financial needs of individuals. When we look at their leadership team, we see the board chairman, the chief commercial officer, and then the chief risk officer. And then their bond program size is 150 million cedis. Now, when we look at why they came to market, they came to market to fund their loans and advances, and then also to boost liquidity and their capital management. So Easeway saw a strong performance up to 2020, but has faced increasing financial pressures since then. So in 2023, and the first half of 2024, however, we see that Easeway made a net loss, and this is mostly because of the total operating expenses and admin expenses, which was actually more than the total income the company had made in that period. So then at the end of first half 2024, we see that Easeway made a loss of about 3.2 million cedis. So since Jan 2023, firms and institutions have consistently held the largest portion of Easeway bonds compared to pension funds, individual investors, and then also associations. Now, when we take a look at Letshego and their profile, we see that Letshego came to the market as part of its strategic plan to expand its access to capital and support the growth initiatives across Africa. So it was established in 1998 in Botswana, and it started as a micro lender and has since evolved into one of Africa's leading financial institutions. And their core mission is actually to improve the lives of the underserved populations by offering accessible financial solutions, such as offering financial lending, insurance and lifestyle products, and then also taking savings. So their bond program size is actually 500 million, and they came to market to work on their working capital requirements and then also to expand their businesses and to also repay existing commitments that they had made. So when we look at the profit after tax trend for Letshego, we see that the company made a net loss in 2022, which was mainly because the costs associated with borrowing funds to finance its lending activities increased in that period, coupled with other operational expenses such as credit loss exposure, and then also exposure on loans and advances. But then in 2020, so after 2022, Letshego's profits rebounded after the company started cutting costs and improving operational efficiencies. Now, when I took a look at their financials, what I saw was that there was actually a loss of about 78 million from their lending activities. But then in 2023, the company was able to manage their lending activities and made an income of about 21 million in lending activities. So to add to this, the operating income between 2022 and 2023 moved from 23 million cedis to 141 million cedis in 2023. So for their bond holdings, since 2023, we see that there's a lot of investor confidence in the company, and a major chunk of its holdings is largely held by firms and institutions, which is about 102.7 million, followed by foreign investors. So the interest from foreign investors actually suggests a strong level of confidence in Letshego's financial stability and growth prospects. Now, when we look at Bayport's profile, we see that it was established in 2001 as part of the Bayport Group, and it actually operates in several countries across Africa. And Bayport offers a variety of personal loans, and then also personal unsecured credits, and then also offers consumer finance solutions. Now, their program size is also 500 million, and they came to the markets to finance their working capital, which is the income they use in their day-to-day activities, and then also to finance the loans and advances they had taken, and then also to pay down any indebtedness from their existing obligations. So after 2019, where they recorded a net loss, Bayport has actually rebounded from 2020 and has surpassed the five-year average of 15.8 million cedis. So the highest profit after tax was in 2022, where the company had more interest income of about 148 million cedis, which is by far the highest interest income in the period. So also the profit after tax for first half 2024 also suggests that the company is maintaining profitability, albeit slightly below the average. So it can actually be viewed as a positive indicator trend if it actually continues to the end of the year. So as of September 2024, Bayport's holdings is largely dominated by firms and institutions, which is about 55.8 million cedis, followed by pensions of about 81.2 million cedis. So when we take a look at Casapreco, which was admitted on GIFM in 2024, Casapreco is a well-known Ghanaian beverage manufacturer, primarily recognized for producing alcoholic and non-alcoholic drinks. It was also founded in 1992 by Dr. Kwabena J. The company has established a strong brand presence in Ghana and beyond. And it actually offers products such as Alvaro and the famous Alomo Bitters, and then Storm Energy Drink and Awake Purified Drinking Water. So Casapreco also has a bond program size of 600 million, and they came to the market to finance their day-to-day activities and then also finance their capital expenditure and refinance any indebtedness from existing obligations. So in 2019, Casapreco had a profit after tax below the industry average of about 4.2 million, which and then after 2019, we see that the profit after tax actually increased to 31.11 million in 2022, and we see that in 2020, and we see that in 2022 the company actually made a loss, and this was predominantly because of a higher cost of sales from prices. So in 2022, prices of raw materials, including the ingredients for beverage production, shot up from mid-2022, and I think that was when inflation had hit its highest levels to about 54%, and it caused supply chain disruptions, as well as making overall costs generally higher. But then for the first half of 2024, we see that the profits after tax had actually been higher than the previous years, and also maintaining profitability, which is also because they came to the markets to borrow from the public, and it can actually be viewed as a positive indicator if the trend continues for the rest of the year. So when we look at Casapreco bond debt holding trend since their issuance, we see that a chunk of its debt holding is from firms and institutions, followed by pensions, and then also commercial banks and individual investors and individual investors and associations, and finally brokerage firms. Now, when we move to Quantum Terminal, we see that it actually came to market to repay SCB indebtedness and also have working capital for their day-to-day activities. And then also it was also to be utilized on expansion works at the Quantum Terminal tank farm. So their bond program size is 140 million cedis. And now, after looking at their profits after tax, after 2019, where Quantum made a net loss, its profit after tax from 2020 has actually been on an upward trend. In 2020, the company returned to profitability with a profit of about 7.2 million, which was also followed by improvements to 11.3 million. And then we see the highest profit after tax in 2023, which is about 24.6 million cedis. And for the first half of 2024, we see that the profit after tax has actually surpassed the industry average of 11.48 million to 17.4 million. When we look at the debt holding since Jan 2023, we see that firms and institutions dominated the total debt holding of about 12.7 million cedis, followed by individual investors of about 4.5 million cedis. Now, Daylex Finance is actually a financial institution in Ghana, which specializes in offering credit and loan services, also giving working capital and also import and export loans. And they came to the market with a bond program size of 150 million, and it was essentially to fund their loan book and then to fund their working capital. Now, when we look at the profit after tax since 2019, we see that for Q3 2022, it has actually made a loss of about 4 million, and we see that the highest profit after tax is in 2018, which is 9 million cedis. Now, as of April 2023, we see that the firms and institutions are the largest holders of their bond, and it actually follows suit by foreign investors, and then we see pension also following suit. Now, so we've actually taken a look at the corporate bond issuers. So now what we are doing now is to look at how the different types of investors have participated in the corporate bonds over the period. So from this chart, we see that firms and institutions are the dominant holders of corporate bonds, ranging from 295 million to over 534 million by September 2024. Now the next after firms and institutions are the pension funds, and they have also increased their involvement. Reaching 231 million by September 2024. And this is because of the fact that corporate bonds align with their long-term investment strategy. While commercial banks initially held limited positions, their participation also grew significantly in 2024, with a notable increase in September to 37.9 million. And this shift actually indicates banks' rising interest in corporate bonds as part of liquidity and management strategies, while taking advantage of the yields on the corporate bond market. Now, when we look at the total outstanding corporate bonds minus the quasi-government bonds as of September 2024, we see that CASA Preco is actually the highest, with about 351.18 million, followed by Bayport and then Leshego. So the total outstanding corporate bonds as of September is 884.84 million cedis. So looking at the comparison of the net income margin between four issuers of corporate bonds and their earnings assets, when we look at the net interest income, which is essentially the difference between the income generated from lending and the interest paid to depositors, we see that Leshego interest income was above the industry average of 14.2. But before that, we saw a decline from 33.5 in 2019 to 6.4 in 2022. So Bayport, on the other hand, maintained a more stable net interest income margin, but also fluctuated between 22.5 and 17.4 in recent years. Bayport's higher margins also suggest a strong focus on maintaining interest income, which is also through their lending rates, but ended below the industry average by 9.8%. So looking at the earnings assets as of as of first half 2024, we see that Letshego has the larger total earnings assets by 1.3 billion, which actually positions it as the leader amongst its peers, with a strong and diversified portfolio, which and is followed by Bayport with an earnings asset of 946.6 million. So despite the challenges, especially during the GDP period, these corporate bond issuers have demonstrated resilience by continuously expanding their loan portfolios. So Letshego's dominance in this space is notable, with Bayport also following closely, and while Daylex and Easeway maintain a smaller but consistent loan good. So as of June 2024, Letshego's loan book grew to 1.1 billion, making it the largest among the compared institutions. Close behind, we have Bayport with a loan book of 946.6 million, and then also having Daylex with a loan book of 655 million, and then finally we have Easeway with a loan book of 412 million. Now, when we look at the corporate issuer stated capital trend since 2018, we see that Letshego's stated capital trend actually rose dramatically from 31 million to 16.2 million in the first half of 2024. So in 2022, Letshego's stated capital increased by 2 times from 2021 through the issuances of new bonds that the company issued. Now, when we compare the Ghana Corporate Bond Index to other major indices from 2023, we see that the Ghana Corporate Bond Index is actually the last but one performer compared to the major indices. However, we see that it has surpassed the domestic bond index with about 12%. But then when we actually go as far back as 2018, we see that the corporate bond index has surpassed all the other indices with a cumulative year-to-date of around 294.7%, followed by the Treasury Index. So it actually shows that it is good to hold corporate bonds for a longer period than holding it for a short term. So now we have reviewed the companies on the corporate bond markets, looked at the key metrics, and then also what makes them stand out. Now let's look at the limitations of the corporate bond market in general and what they are actually lacking. So many individual investors in Ghana actually lack sufficient knowledge about corporate bonds as an investment option, and this actually results in a preference for other familiar assets classes. And also, there's also not enough understanding of how corporate bonds work, including their risk or return profiles. And many investors avoid participating in the corporate bonds. Now, when we look at the credit ratings, we see that Ghana has a limited number of credit rating agencies, and there's often an over-reliance on international agencies. So many local companies, especially the smaller ones, are either not rated or receive poor ratings due to their lack of sufficient data and transparency in financial reporting. And then finally, Ghana has a limited number of independent research firms producing comprehensive analysis on corporate entities. So most research is actually done by a few large institutions or global firms, which may not cover the smaller companies adequately. And so this lack of in-depth actually discourages investors, particularly from smaller or retail investors who rely heavily on information to make decisions. So still on the research work, at Blackstar, we assess the organization's ability to meet its obligations or sustain its growth strategy. So what we do is we go beyond numbers. We offer sector-specific research that evaluates a company in the context of its industry. So whether in manufacturing, finance, real estate, or services, insights actually help understand the market forces impacting the companies, the corporate companies. So whether you are managing portfolios, issuing loans, or conducting due diligence, our research work actually enables you to mitigate risk and then also seize opportunities with confidence. So let us help empower your decisions, make your decision making with deep insights and also reliable data on the companies that matter most to your strategy. So you can get in touch with us today or anytime, and then to learn how our research services give you the competitive edge in the corporate world. Thank you. I'm open to any questions.
All right, thank you very much, Ernestina, for such an in-depth presentation. All right, participants, the market is quite wide and the corporate bond. Excuse me. Hello. Okay, it's clearer now. Okay, so the floor is open for questions at this moment. We've delved into the macros. We spoke about the markets, and also we focused on the corporate bonds. In terms of issuances, we considered the parastatals, where we spoke about ESLA and co, and then we delved into the private companies who have also issued bonds. We are talking about the likes of Leshego, Dalex, Eastway, Casapreco, among others. The floor is open for any contributions, reactions, or any questions for our team of analysts as well as our presenter. Whilst we wait for people to carve their questions, I would entreat everybody to participate in the anonymous poll I mentioned earlier before the presentation started. We just want to gauge where your interest lies in terms of all that has been discussed this morning. Nonetheless, when I see a hand up, I'm just going to pause and take the question. Or when I see any question in the chat box or the Q&A box, I will take your questions. The floor would remain open even as we go through the anonymous poll. It's not going to take more than 2 minutes. Okay. So the first question has to do with the macros and particularly inflation. So after September's inflation rate declined to 21.5%, what is your estimate for the inflation rate in October, given that the Israel-Hamas war is escalating? And according to analysts, it may actually affect prices. What do you make in terms of estimates for October's inflation rates? There is a second question in there. At this point, we just want to learn your forecast for the end of the year. People are predicting we are going to be below 30 or between 13 and 14 or 14 and 15. Let us know where you think inflation is going to record at the end of the year? The next question focuses on exchange rates. So we would like to know from you what's your end of year forecast of the exchange rates would be in terms of CD dollar year to date. Do you see a stable with positive factors in play or a volatile currency driven by global economic factors or depreciation due to internal economic challenges or appreciation due to increased investor confidence? Like I said, this is an anonymous poll, and I entreat each and every one of you to participate so that we gauge what your views are with regards to what has been presented today. Now, come November, the monetary policy team would be meeting, and so we would like to know from you, do you see the rate will increase or MPR will decrease, or it's going to remain unchanged, or you are unsure about what the outcome of that meeting would be? In just the ended meeting, they actually cut the MPR by 200 bps to signify that there was a necessity to reduce the rates such that economic growth would be spared. So if the risk to growth outweighed the risk to inflation, then they are bound to reduce the rates. However, if it's the other way around, then they are set to increase the MPR. Now, the final set of questions border on corporate bonds, what we had just spoken about. So there are 6 questions in this part. The first question would like to know your perception of the corporate bond market in Ghana. Do you think it's a growing market and it presents good opportunities, or you think it's still underdeveloped and lacks liquidity? Do you think it's too risky due to economic conditions, or you have little or no exposure or knowledge of the market so far as corporate bond is concerned? Secondly, we would like to know from you, among government bonds, treasury bills, and corporate bonds, which do you prefer the most? Which do you prefer the most in the current state of the economy? I need to qualify that. Now, thirdly, which factors do you prioritize most when evaluating corporate bonds? Is it the interest rate, their credit ratings? Is it the yield or the maturity? 4, what duration would you prefer when investing in corporate bonds? Are you looking at 1 to 5 years or 5 to 10 years or above 10 years, or you are indifferent about the duration? Anything goes. In the penultimate question, we are asking of you whether you prefer fixed or floating rate corporate bonds. And finally, which of the following would most influence your decision to sell a corporate bond before maturity? Is it rising interest rates, credit rating downgrade, or issuers' financial difficulties, or better investment opportunities elsewhere could make you trade off your corporate bond to access that particular opportunity? That brings us to the end of our poll. Thank you very much for participating. Now the floor is open. We are back onto the presentation. If you have any contribution or any question or reactions, we are here to help address them or answer them. Okay, Papa Sam has a question in the Q&A box. Looking at the numbers of some of the non-bank financial institution issuers of corporate bonds, I observe a negative free cash flow, assuming all maturing debts are not refinanced. Do you have insight or nuanced understanding of whether this is normal for that industry? So Papa Sam would like to know, after you did your presentation, he realized that most of these corporate bond issuers, especially the non-bank financial institutions, had a negative free cash flow. And so assuming all maturity debt are not refinanced, do we have insight or nuanced understanding of whether this is normal for that industry or not?
Oh, sure, Anas. Let me just coming on that. So just to be a bit clear, I know that for the non-bank financial institutions, a lot of them haven't been quite frequent on the market. I think the ones that have really come on the market quite recently are Casa Perco, and from what we looked at, they are quite good on in terms of the cash flow. So just to generalize it and say, um, well, it's normal for that part of the industry. I don't think we can say that. I'll probably say that, well, the more issuers that come into the market, we'll be able to judge whether it is normal for normal for that side of the industry. But looking at all of them, they have different businesses that they operate. So Casapreco does the the beverage industry. Quantum is on the other side, as Ernestina mentioned. So they don't really, because they look at different industries, so we can't really classify them as the same industry. So I don't think so, Papa.
Okay, thank you very much, Now Louisa. Now Louisa is the head of our research and analytics team. So we put that one. Any other questions or reactions or contributions? Okay. Okay, I have a question on my WhatsApp phone. Okay, so this particular one wants to know, given that there's an absence of credit rating agencies in our markets, even for what we have, they actually rate the sovereign securities or the issuer of sovereign security. But in developed economies, there are vibrant rating agencies that actually rate corporate organizations. So how do we navigate the absence of credit rating agencies for corporate issuers here in Ghana, since we would only have to rely on their posted financials?
Sorry, Ernest, can you read the question again?
Rating agencies, can you hear me? Yeah, given the absence of credit rating agencies in our market, even for what we are exposed to, it focuses on sovereign securities or the sovereign issuer. How do we navigate the absence as compared to the developed economies where they have rating agencies rating corporate organizations? Would we only have to focus or rely on their posted financials to make a decision as to whether we should invest in them or not?
Sure. So with the rating agency, and I think I saw Omar from the GSC on the call. So one of the things that the regulators are really pushing for is the ratings of the various bonds on the market. And I'll say that we handle the Let's bond program, and they are rated by the GCR. The other corporates aren't rated, but it looks like it's a growing trend to have ratings on there. And I think the new regulations that are coming into the market are touching that ratings on there or a credit guarantee. So in terms of relying on just their financials, I think we have very good fund managers and analysts in the system that really do a very thorough due diligence on the various institutions that come into the market. But hopefully we would have some of the credit rating agencies. I think Augusto and Co have come into the market. GCR is also around. I think the minuses about the credit rating agencies that a lot of the corporates think about is in terms of the payments, the financing of it. But hopefully, once we've been able to cross that hurdle, we'll see a lot of them in there. But not to say that relying on credit rating agencies would help boost our market because, well, it's also a report that you would have to read and analyze. So, hopefully, as the market continues to develop, we would see a lot of them in there. I'm not sure if I answered your question or if you have a follow-up question.
Thank you very much, Na, for the insights. It's still a growing market, and so we look forward to some of these rating agencies. Thank you very much for that input. Any other questions? Okay. 16 minutes past our time. If there are no questions or contributions or reactions from, okay, Donaldson has his hand up. Okay, Donaldson, your mic has been allowed. You can come in with your question or contribution.
Oh, hello, good morning, Ernest. So this is just a follow-up. You know, Papa's question, actually, he meant the non-bank financial institutions, so like Bayport and Leshehu. So I think that's what he was referring to, not Casapreco and the likes. So I don't know whether you have insights on the understanding of their business model, why their free cash flow is in the negatives. Thank you.
Sure, Donaldson. Forgive me for that oversight on the NBFIs. So maybe I'll just highlight, we may not have all the information to give here, but I'll just highlight the fact that, well, a lot of the NBFIs have their loan books divided into various sections, and one of those, which is quite heavy, is the deduction at source, which has been having quite a few issues not quite recently, for the past few years, I think 2 to 3 years, in terms of payments from controller, which is making them a bit cash strapped. So I think we've been moving between 2 to 3 to 4 months delay. So you may understand why maybe you might see a bit of some low cash flows in there. But in terms of the negative free cash flows, I don't think, I haven't seen the numbers in a minute, but I don't think I can't speak for Lechego. I don't think they're in the negative cash flow. I don't know if that answers your question.
Yeah, that's fine. Now, thank you very much.
You're welcome.
Yeah, I see Kafu's hand up. Kafu, your mic has been allowed. You can unmute and also suggest your contributions to the floor.
Hi, good morning. Can you hear me, Ernest?
Yes, I can.
All right, sure. So I was just here hiding and somebody pinned me out. So thanks now. I'm here for Lechego, Leteho, as we said. So just to add to what Nah has said, usually what we do is to ensure that we diversify our portfolios, like Nah mentioned, in terms of the products we have. And then based on the kind of funding we have, we channel the liabilities, which is the funding we have, to match the assets. So like Nah mentioned, the kind of deduction at source challenges that we have with the delays with the CAG. And now most of you funders also come for short-term funding. We ensure that we put those liabilities in terms of the funding into creating assets, that is short-term assets. And then thankfully for us, we have products that meet the long-term and then the short-term. And that's where we have our mobile loans, the quick loan, that funds most of the sorry, that looks at most of the short-term funding that we have on the 91-day or the short-term curve. And then most of our long-term funding suits the deduction and source. There are engagements with the regulator and the Ministry of Finance, government on the delays that we have. But based on the feedback from the regulator, we are expected to manage these delays from government. But sometimes out of the blue, you get government paying in twice in a month, though they currently have an average delay of 3 months. But for us, we are able to channel the numbers that you see because we put in place prudent liquidity measures to ensure that the funding that we have, one, we are able to meet our obligations and that we do not default. And that's why since 2015 that we started the bond program with Blackstar, we have never defaulted in the market, even during the hurdles that the industry has gone through. We've always paid our obligations on time. And that's why anytime we go to the market, we are oversubscribed because of the kind of performance that we churn out and the kind of reputation that we have. In terms of the cash flow, I would have to look at that. I don't know the period that you are looking at and then the details in there. But generally, these are the decisions or the things that go into our decisioning and how we manage our various portfolios and our liquidity to ensure that we get the income as expected. So yeah, that's what I just wanted to add to what Na has provided. Thank you.
Thanks, Kafui. I didn't
Thank
know
you
you
very-
were hiding on the call, but it's good to hear your voice.
Thank you very much, Kafui. Great learning from the perspective of the issuer. Any other contributions or questions? Okay, in the absence of any further questions or contributions, I guess it's a good time to draw the curtains to today's event. We've looked at an overview of the current market landscape. We touched on inflation, currency, and we also delved into the corporate issuances and also market updates. We did analysis of the performance of these corporate bonds as well as some stocks. And so we believe that these insights are going to guide you in your investment decisions. Thank you all very much for joining us today. And Market Color, as a reminder, is hosted every third Tuesday of the month. We bring leaders like yourself, market players like yourselves, to have conversations or discussions around market-related issues. Let me highlight that Blackstar Group is a key player in both the primary and secondary markets, and we offer a wide range of services across fixed income, equities, as well as the corporate bonds we spoke about this morning. So for those looking for investment opportunities, note that we provide you access to high-performing mutual funds as well, and also corporate bond portfolios and global investment solutions like Eurobonds, US Treasuries, US stocks, and what have you. We also have a strong presence in the corporate bond space where we've seen significant traction in recent months. And so if you're interested in any corporate issue or securities, kindly let us know. We have an advisory firm that is very robust when it comes to their mandates, and also our capital market team is also very active. So should you need any of our offerings or services, we are just a call away. When you are interested in some of these analytics that we shared here, you can simply follow our social media pages at Blackstar Group. Every now and then we are posting insightful charts and also market-related insights on our pages. You can also follow our WhatsApp channel and you won't regret it, as you would be really educated. Once again, my name is Ernest Edu Owusu. I was your host for today. Our presenter was Ernestina Mensah Othabo. Thank you very much for joining the call. Till we meet again next month, I hope we all have a great business month. Thank you very much and see you. Bye.